We're going to let Winky loose on the charts today. And a warm welcome to one and all. And for those of you who have not seen me before, my name is Langers. I am the overgrown child that is the Scruffy Trader. And sitting next to me is Wonder Wink, who wonders what I'm going to get up to next. And the only wonder in my life is her. And obviously wondering where the coffee comes from, because we all know Scruffy likes her coffee. And especially when she makes it, because she makes it better than I do. And I'm not allowed in the kitchen because I make a mess. So it kind of works out quite well. Is that all right?
That's fine.
Okay. We do get comments about our political correctness, and my attitude to that is just grow up. Couldn't care less. Right? So, what we doing? I've had a phenomenal week. I don't need to work today. And I'm trying to get Wink to understand how these work. Now, terminology-wise, don't matter. As long as she understands what she's looking at, how she interprets it is up to her. Because I don't talk the normal way either, because I wasn't trained the normal way and I didn't learn the normal way. And what I will say is unlearn pretty much everything you've been taught, because 95% of what's out there is just crap. Absolute crap. It's recycled bollocks by someone who doesn't do this for a living. You know, I trade in the moment. I show you what I'm doing. And the guys that are in the Scruffy Squad will stand testament to that. And more importantly, I show you statements. It's not many do that. So let me flick this on. And we're going to see if we can grab 10, 15 pips. Well, not we. Okay. What are we looking at?
Well, we're looking at an hour's chart.
You're on the hours chart. It's the DAX, by the way, what we trading this morning, or the German 40, depending on what broker you've got. If you are looking for a broker, do check the description below. You'll find my preferred brokers, IG, BlackBull. BlackBull are very good if you're a beginner. 500 to 1 leverage at this moment in time. And I'll even give you some of my time if you open an account and trade with it, or even the 5%ers. But more on that later. Go on.
Right, let's have a look.
So what's the first thing we're looking at here?
Well, it's had a strong move up.
Yeah, so you can see the strong drive.
Yeah, but it didn't go through.
Whoa, bollocks. Right, sorry.
Yeah, but it didn't go through.
All right, so it's stalled.
And then it bounced back again.
So we've had a retracement.
And it didn't bounce at the bottom.
Okay, so we've got a failure here.
Yeah.
What's that coinciding with? You always need to look back over in time. So if you're right, it's a strong drive up, it's failed here and it's failed there, but you need to know why it's failed at the 2 points. Okay, so the first part is that is a solid level, and you can see it's been tested many times and it's held. So that tells you why it failed. So in other words, that is a good attraction point if this is moving up. Likewise down here, there's been sideways chop. So that is a good solid level. So you've actually got 2 good points of attraction here. But at this moment in time, it failed in the middle. So why would you think it failed in the middle? Remember to look back in time. You don't know. Okay.
What did it fail?
It failed because it's found that structure point. If you put a dotted line on, just to build your chart up, there, that rollover point is identical to that one.
Yeah, I can see that.
All right. So what the charts are doing over and over, it's a self-fulfilling prophecy. Right? It's constantly looking to retest and reform. Now, if there's nothing there for it to test, In other words, it's pushing beyond the boundaries. It still needs a structure point, and that's where an expansion level would come in. It's never been tested, but it's a logical point of failure. All right, so you'll see it push up, and you'll see me do it all the time. Right, but if you've got solid levels that are there, we know what these levels are. They've all been tested in the past. Self-fulfilling prophecy. It'll come back to them, and look at the way. And this is the thing, guys. I spend more time doing my levels than anything else, and when I do them, they're almost pit perfect. So I know exactly how the price is going to work, and that's what breeds my consistency. You know, if you're looking to get in on a moving average cross, or because this stochastic's overbought, oversold, because the morons, this one.
You ding dong!
It doesn't work. Really doesn't work. In fact, I watched an interview, one of the videos, and he said the number one rule to make money is 2% risk. And you go, what? What are you talking about, son? Do you ring your broker up and say, I just want 2% risk? How is that a strategy? Boggles belief. Boggles belief. Anyway, I'll see if I can dig it out. It was hilarious. Complete moron. I'll dig it out here.
So this video is actually going to really help you, and I'm actually about to expose some secrets that many top traders will probably never tell you. So, number one, use 2% risk management, nothing above that. 2% risk management is key. It will get you rich.
Are you serious?
Number two, don't use anything below the hour 4 the daily chart. It will make you rich as well. And number three, one of the most important things, a good strategy.
They've done studies, you know. 60% of the time, it works every time.
Sorry. Right. Okay. Right. So we've got a failure rate. All right. And you can see it in a bounce. So if it's failing to go down, what's it going to do? Go up. So if you're looking at that, do you believe that it's going up?
Yeah, I think it will go up, yeah.
You think it will go up?
Yeah.
All right. So now you've just basically looking at an hour's chart. You've got a thesis. Your thesis is to the long side, correct?
Yeah.
And you're happy with that? And you don't want to look at this chart no more?
Would you not put in 5 minutes?
That's correct. All right. I know this is odd, but I'm trying to show her in real time. And it's like most things. If you don't know, you don't know. And if she gets it wrong, she gets it wrong. There's no shame in that. But what she's done, or what I can see, is she's seen the drive up, which is correct. Seen the failure here. It has come back down. Now, it's come down aggressively, but then stopped dead. Got to ask yourself, why is it stopped dead? Look back in time, in history. There's a failure point here and a here. All right. So it's funny how these things repeat constantly. So we know that is a level of attraction. And what's happened at that retraction, it is bounced away. Now it's shot up and it's failed again. However, the pressure is still this way. And how do we know that? Nice big bodies here. These green bodies are bigger than these ones coming in. You know, you've got to pull in, flush out, stalled on a level. Now the volume's coming back in. All right, don't need a volume indicator. You can read it off the chart. So now what we need to do is find an entry point to the long side. So 5 minutes. You're looking for how many pips?
10.
You want 10 pips. Okay. Where do you think your optimum entry point is?
It's an entry point I always have there.
Well, think about it logically. All right. Is it something that'll repel or push your market. Would that make common sense?
Yeah.
Right, okay. So is there anything here that you can see you can use?
Oh, perhaps that black line.
This black line?
Yeah.
Right, okay. So you're looking for a break to the upside that way?
Yeah.
Okay. Or down here? Right. Now, if you're looking for 10 pips, if you get a measuring stick and just measures 10 pips out, we know these levels, because of the way they're drawn in, are pretty solid. But you need enough space between the price and that to get in. Because if you start getting in at 5 pips below that, that could just push it away. So if you're looking for 10 pips, just put a measuring stick underneath it. The base of that box is your last point of entry.
Right.
All right. Does it make any sense?
Mm-hmm.
Okay. So what would we do now? When would you want to get in?
See, I don't know. This is the bit I have trouble with.
Right. Well, the price can either go up or down, yes?
Right. Yeah.
Right. And looking at it, you've decided that it's going up.
Mm-hmm.
All right. So you know that's your last point. Okay. What you can do, you can put an order on that point and then follow the price down.
Right.
Set at 10 pips. All right. Or you can let the price come to you. We know this is an attraction point. If you look at the top screen here with all the markings on, you can see that's showing you how it's going to push down. So that can help you trigger in. All right. So let us just drop an order in. We'll just put £1 on. All right. Don't have to go mad with a 10 pip target. Okay. And we're going to place it at the top of there.
Where, sorry?
Right. So what we've done, I'll widen this out just so you can see it. It's at the top of that price at the base of that box.
Right.
That'll give you 10 pips. All right. Now, the reason why it's at the top is very simple. Now, you can, if it's down here, count back 5 candles. That'll give you an average. But we're very close to this level, which could repel. Look how many times it's bounced off. Boom, 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 boom. So we know this is pretty solid. It's going to take some momentum to get through it. All right. If I put a price at the top of here, it means it's got to break and keep on going that way in order to trigger the order. Mm-hmm. Right. So it has to pick the order up in a single move. And the chances are it's going to come back and touch that. If it keeps on going, all we do is we follow the price down on the red candles, the opposing candles, till it turns green. Then you stop and you leave it and you wait for it to come and catch it.
Right.
All right. So that's what we're going to do. All right. So what we're going to do, we are going to follow the price down with a 10 pip trail. And the idea is for it to pick it up and then slam. That's it. Right, there it is. It's picked up the order. And we just leave it. That's it. Job done. So we'll let this play out and come back to you when it's done.
See, when you said that.
Okay, boys and girls, we've just been having a little discussion of sorts. In other words, I was trying to explain things to Wink, and Wink was sort of just explaining that if I say it anymore, I might end up with a black eye.
I know, but not everyone can read the charts like you.
Of course I can.
You can't. And when you're doing it, looks so easy.
It is easy.
Only for you.
All right. Right. She was, well, asked the question about the orders. When I'm putting extra orders in, what did you say?
Well, I asked how many you can put in.
Put in as many orders as you like, as long as your margin can take it. Now, I do build into positions, and you've seen that, because I'm almost expecting to be wrong. But you are always wrong on the point of entry. Every single time you go to market, you are wrong.
What?
Because there's a spread, so you're against the market as on the point of entry. So the spread on this is 1.2. So when it triggers, you're 1.2 pips behind the market. Right. So you're always wrong. Now, if you have that mentality and you start small and build up, you can build backwards. Now, she's asking why I put orders in like this. Well, she has to learn her own mistakes, but I don't like giving money away either. Right? That is a structure point here, where it bounced and it failed. So if it's breaking, it had an opportunity to move up, and we'd already identified down here. So I am happy to average all the way down here. So when you're looking at it, it looks scary as hell. And you go, it's gone 30 pips against me. Well, that's just your fear factor, your greed factor.
Yeah, but no one wants to lose.
No, but that's the point. You've got to learn to lose. You've got to learn to sit in negative positions, because that's the way the market works. It's all engineered to spook you out. It's like a game of chess. All right. And the market will push one way before it goes the other way to spook you out. Now, if you've built a position like this, we can close this off and we have made money, because that position is catching up to this one. All right. And the higher that goes up, it pays that off. So as we can see, that they're equal now, roughly. All right. Now, this is making money. If we kill this now, we have made about 7 or 8 quid. So we are net positive at this moment in time. So you could just kill the trade. You're net positive. You've made money. You've lost one, which isn't that much, but the other one has paid it off. And that's building positions. And it's why you don't go in 100% straight away. Only a fool does that. All positions are built like this, you know. And when I was doing this in the factory, that's what we did. We waited till it got to a certain level. We bought our dollars to sit on. And if it went further down, I buy some more, because I'm getting a better price. And if it went down further, I buy even more. And again, build it up. And that's what you do. So we can close this off right now. And this would have, and this is 1. So what you do is you can go, right, I'm having that. So I'm taking that. And I'm losing that. Just like so. And that. Are we worried that we've lost money at this point? No, we're not. Because we've started with 0 and we've ended with 1. All right. And I've killed it because that's the way I think. I'm not bothered about what happens in the middle. And everybody can cry as much as they want, saying, well, this might go up even higher. Fine. You know, that's your own opinion and it's how you trade. But this is how I trade. I trade in net positives. As long as I make more, I don't care what happens in the middle. All right. And case in point, there you go. That is a net positive result. All right. And if you think your trade's out all the time, you will survive in this game. Very, very simple. That makes sense to you?
Mm-hmm.
Yeah, sure? You don't look sure.
Keep practicing.
Keep practicing. All right. There's another reason why I've killed it off as well. It's 10 o'clock. It's Friday. I don't like trading on a Friday. And we're going out. Gonna have a jolly old time of things this afternoon. We've had a great week this week, haven't we?
We never know.
Going off to feed the ducks and have some sandwiches and stuff like that. So have yourselves a great weekend, guys. Do keep your comments coming. Does motivate me to do more of this. What I will say is, don't let anybody tell you how to trade. Look in the mirror and you will be your best teacher, because only you know your personality. Make a framework, which is levels, structure points, and then work between those levels. If it goes either side of them, then you've got a problem and you need to sort of have an exit plan to get out. But as long as it's staying within them, as you've just seen, doesn't matter how far it goes against you. Really doesn't. Just build into it and stand by your conviction. So, hope that helps. So as always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.